Welcome back to my channel. Today we're comparing two popular but distinct strategies for securing your financial future. Roth IRAs and high cash value whole life insurance, often described as the infinite banking concept. Whether you're looking for a way to grow your nest egg tax-free or you're seeking a versatile tool for wealth creation, this guide will help you understand the pros and cons of each product. Stay tuned as we explore how to use each of these vehicles for your benefit. Before we dive into advantages and disadvantages, let's define the contenders. A Roth IRA is a retirement savings account that allows your money to grow tax-free, and when you take distributions, they also come out tax-free. On the other hand, high cash value whole life insurance is more than just a death benefit. It is designed to accumulate cash value that you can utilize to create wealth. Many people are familiar with this strategy as the infinite banking concept, where you are able to become the bank and loan yourself money in and out of the policy to invest in whatever you'd like. The Roth IRA offers an unbeatable benefit of tax-free growth. Imagine your investments flourishing without the drag of taxes. And when you retire, you are able to access those withdrawals tax-free. The second main benefit is there is no required minimum distributions, unlike many other retirement accounts. There's no age at which Uncle Sam tells you have to start taking distributions. You can let it sit in the account for as long as you'd like. The third benefit is flexibility with withdrawals. With the Roth IRA, you have some flexibility in withdrawing those funds early. The catch is that you can only withdraw your contributions, you cannot touch the growth of the policy, and it's only in certain circumstances. Now, let's talk about the three pros of the high cash value whole life insurance. The very first pro is the infinite banking concept. The infinite banking concept is obviously a huge benefit, and the reason is you have the ability to access your basis and the growth in the policy in the form of a loan to go out and create wealth in a real estate syndication, a self-storage fund, or potentially a lending fund. The ability to access your cash and utilize your cash is a huge benefit here of the whole life insurance policy. There are no penalties for utilizing the loan provision. There's obviously an interest rate that you pay back to the insurance company. However, it's important to note that you're also continuing to earn interest inside your policy, even though you took those dollars out and invested them elsewhere. Yes, that's right. You're earning interest somewhere in an asset that you invested, and you keep earning interest inside the policy itself. The infinite banking concept. If you want to understand more about that, what we call the investment optimizer, head over to our page, moneyinsightsgroup.com, and we have webinars on there that you can check out that explain it in further detail. The second major benefit to whole life insurance is guaranteed growth and dividends. Guaranteed growth inside the policy depends on the insurance company you're utilizing. However, it'll range anywhere from 2% up to 3.75% of guaranteed growth every single year. On top of that, if you're using a mutual insurance company, you'll also receive a dividend from the insurance company. As a whole life policyholder, you're essentially an owner in the company, and you will share in the profits of the company in the way or in the form of a dividend. And lastly, there's also a death benefit on life insurance. This is obviously a huge benefit because this death benefit will last forever. There's no term period on it like a term life insurance policy. It'll literally be there until you die, and at some point it will pay out the death benefit to your beneficiaries. So not only are there living benefits, there's also a death benefit. So let's move on to the cons of a Roth IRA. The first con is contribution limits. The Roth IRA comes with contribution limits that are set fairly low, so you're not able to get the amount of cash in there that you'd like to, especially if you're looking to invest larger amounts. The second con is income eligibility. If you are a high income earner, you likely are not able to contribute to a Roth IRA. And finally, the last con is the lack of immediate access to your earnings. Inside of a Roth IRA, you are not able to start taking distributions or income, especially on your earnings, until the age of 59 and a half. There's an age limit. You cannot take money out until you're 59 and a half without incurring potential penalties. Now, it wouldn't be fair to talk about the cons of one if we aren't going to talk about the cons of the other. So let's move on to the cons of the high cash value whole life insurance policy. First con is there are higher initial costs inside of a life insurance policy. Life insurance companies are known for front-loading these costs in the early years. It's important to understand how these policies have been structured, because if this policy was structured incorrectly, these costs that I'm talking about could be far more than what you would have to pay if the policy was structured the correct way. The second con is for the complex structure and fees inside of the policy. Whole life insurance companies are not very good at helping you understand what fees are coming out. What I can tell you is that there's 3 forms of fees. The first is obviously the cost for the death benefit. The second cost is administrative costs for that policy to be serviced every single year. And then finally, the third cost is the commissions that get paid to the service to the financial agent or financial advisor who helped you get that policy. It's important to understand these fees, and it's important to ask the right questions to whoever you're working with. Finally, the third con is slower cash value growth initially. Again, because of those upfront costs and fees that are front-loaded with these policies, the cash value, it's still growing every single year, but with that initial hit, we don't have as much as we'd like to start investing. However, we can overcome those costs relatively quickly and get the policy working in an efficient manner. Both the Roth IRA and high cash value whole life insurance offer unique advantages that may fit inside of your plan. The Roth IRA is an excellent place for tax-free growth and retirement savings. Meanwhile, high cash value whole life insurance offers the ability to utilize that cash outside to create wealth and cash flow. The right choice depends on your financial goals, income, and investment strategy. Consider consulting a financial advisor or a financial professional who can help you tailor these plans to what you're wanting. If you found this comparison helpful, don't forget to hit that like button and subscribe to my channel. As always, if you have anything to say, please drop it in the comments and I'd love to respond. We'll see you on the next video.